Welcome back and welcome to Homes Today. This is a proud presentation of Audrey Forshey, who is a well-known RE/MAX realtor as well as a RE/MAX advisor. Goodness gracious, who doesn't need advice when selling or buying a home? They say, worry not if you're in good hands of a realtor. Anyway, today Audrey has alongside her a senior loan officer by the name of Barry Filderman. The topic of discussion is closing costs and hidden fees when purchasing a home. Let's join them.
Hello friends, welcome to Homes Today. My name is Audrey Forshey and I'm a RE/MAX agent in Maryland. Today we have our guest, my friend Barry Filderman, who is a senior loan officer in Maryland as well. Hi Barry, thank you for coming.
Hello.
Today we're going to talk about closing costs when you purchase a property. We all know that there are several fees that are involved in terms of buying a property, but there's some hidden costs that maybe you're not aware of, and we want to make sure that we discuss those with you today. So my first question to you, Barry, is typically when do you disclose, or when are closing costs disclosed to a purchaser?
Well, hopefully the purchasers now are going in for pre-qualification before they actually purchase a home or take an official loan application. The first disclosure of closing costs would be at that preliminary.
Okay.
It's not official though, so we're giving them an idea of what the cost will be approximately. Once we know the sales price and the potential seller contribution,
taxes, those kinds
all
of things.
the exact things, then we take a complete loan application and we have to disclose within 3 days after that complete loan application.
All right.
And then a good faith estimate is sent to the customer so they can review the closing costs.
Okay, and so then in terms of the traditional fees that most buyers pay, we're looking at lender fees, and those would be administrative, processing fees, those would be underwriting fees, that kind of a thing that buyers would be paying that you disclose on that good faith estimate, right?
That's correct. Now, prior to all the regulation, I think as an industry, we took advantage a little more so than today.
Okay.
There are certain fees that are charged, a processing fee and underwriting fee, and these fees I think average about $1,000.
Okay.
Some are less, some are more.
And are those fees based on the percentage of the loan, or are they just a general fee no matter what size the loan is?
It's a general fee, and that's a good question because a lot of people tell customers that the closing costs are approximately 5% of the sales price. You've seen that.
Yes.
Well, if you're going to get a $1,000 fee on a $150,000 house, percentage-wise, that's a lot more.
Right.
Compared to a $500,000 house.
Right.
So on smaller homes, you got to be careful saying a blanket 5% or 6%.
Okay. Also, we know that the appraisal is paid for up front, and we're familiar with that. And then we'll have the title attorney fees, the settlement fees. That would include the fee to conduct the settlement, and there will be title insurance potentially with the property. And one of the things that we would like to tell our viewers is that you can ask your seller, your agent, to negotiate in your contract and ask the seller of the home that you're purchasing for a copy of their title insurance policy. You then may be able to save some money by getting what we call a reissue rate on the title insurance, and that is based on the sales price of the property, and that could be a fair amount of money that you save depending on where your property is located. And then also they're going to have to set up their escrow fees with the lender, and so what's involved in the escrow fees that are what do we collect?
The lender and the attorney are going to collect a certain amount of escrows and establish an escrow account. Depending on the time of year, when the tax bill is due, certain amounts of money are collected. So when that bill comes due, with the future payments, there will be enough in that escrow account to make the payment. And sometimes if you put a lot of money down, 20% or more, some people like to waive the escrows where they pay their own bills. Lenders would rather you escrow because they make sure it's paid, but some people like to pay it themselves.
So it is a possibility that they can pay their own taxes and their insurance. So the other thing I think that they set up for their escrows are their homeowners insurance, right?
Yes.
For in the
fire and so forth.
That
yeah,
sort
the
of
homeowners
stuff.
insurance is one of those things that you cannot escrow for if you, again, put a large deposit down.
Okay.
If you're dealing with an FHA or VA loan, it's required no matter how much you put down, you have to escrow for it.
For the insurance.
And again, lenders would rather have it in escrow because they make sure it's paid, they make sure the house is insured, they make sure the tax bill's paid, where if you do it yourself, who knows what's going to happen financially to people and so forth. So there's less risk to the lender. And that's why some lenders will charge a little premium to waive the escrow. So it'll be a little costly.
Okay.
More costly.
So in terms of the lender, some of the hidden fees that you might not be aware of is on some loans, I believe, if you put less than 20% down, you can finance your mortgage insurance in with your loan. Is that correct?
That's correct.
And so some people might not understand that they're paying an extra fee. So can you explain how that works, please?
Yeah, I think this is one of the biggest misleading parts of a lot of advertisements that I hear on the radio a lot is it's called lender paid mortgage insurance, and I think that's misleading because the lender doesn't pay it, you do. What the lender does is it increases the interest rate so they make more money on the loan, and then that money is then brought back to pay the insurance. So in essence, the customer is paying for it, even though the lender is paying for it, but they're paying for it by charging more so they can make more so they can pay it. So it's really not a lender payment. Your rate's going to be higher. This is the same type of fee when you hear about 10% down loans with no MI on jumbo loans. This is the same theory, is that you're paying a higher interest rate. So in essence, you're paying for it. So you want to be careful on comparing a 20% down loan with no mortgage insurance compared to a 10% down loan with no mortgage insurance. Check the rate out. You'll see that the rate is much higher at the 10% down. And then there's other options you can do by doing an 80-10, which is basically a 80% first and then a 10% second. That would eliminate the mortgage insurance, and you probably would get a better interest rate on the first mortgage.
Okay, and so just for clarification, that would mean that if I went in to get a mortgage with 10% down, and I'm just making up an interest rate, let's say the interest rate's 4%, potentially my rate could be 4.25%, depending. Could it be higher than that?
It's most likely going to be higher than that.
Oh,
yes.
It's a higher interest?
Yes, and
okay.
it also depends on your credit score.
Okay.
So the higher your score, the lower the insurance will be,
okay.
the lower the rate will be.
Okay.
Once you start getting above the maximum Fannie Mae and Freddie Mac, you're dealing with super jumbo loans. It's a little bit different when it comes to that, because most of them require 20% down. If they don't require 20% down, most of the time you're looking at no MI loans.
Okay.
And that is, again, all built into the interest rate.
Okay, so we just want you to be aware as consumers that even though they say that there's no mortgage insurance, compare the 10% or 5% or 15% down mortgage that says it has no mortgage insurance to what the interest rate would look like as a 20% down mortgage, what those rates are in terms of what you're getting and what you're paying for. Some of the other things that I'll talk about that are hidden fees or hidden costs in terms of purchasing a property are things like your home inspection. The lender doesn't really care about your home inspection. I mean, they care about the condition of the property, but those are things that when you meet with your real estate agent, you should discuss with them. You'll want to have a home inspection on the property. How much does the home inspector charge? Usually the larger the home, the more the inspection, the time to take, so it costs a little bit more. And there are also things like if you buy a property on large acreage, you may have a well and a septic that need to be inspected as well. So you might need a water test to make sure that there's no bacteria in the water, and the lender is going to want this information.
Yes.
Because they want to make sure that you can drink the water. The other thing is you're going to want the septic information to know that that is in working order
Yes.
as well, right?
Yes.
So that is important to the lender. Typically, depending on the size of the home those fees could probably run you anywhere from $500 for a single inspection to $2,000 to have the whole inspection, a well inspection, and a septic inspection also. The other thing that you want to budget for are things, your ongoing taxes and your insurance. As you pay your mortgage, typically you're going to be paying your taxes in the escrow account that Barry spoke about, and your insurance for any kind of damage or fire. That goes on year after year, and your taxes could go up. If your property values go up, they can go up. They can go down as well, but typically they go up. The other thing, you're going to need to do things like maintenance, common maintenance. You're going to want to do the things that keep your house painted so you don't have rotted wood, your gutters and downspouts, all those sorts of things. The condition of the property will retain your value in time when you may want to sell the house. Another thing that is a cost that you may not think about and not really discuss is your moving fees. When you have to get all of your items out of the house, a lot of times when I go to list a house, I ask people to put their stuff in storage, and so we can clear the house out so it shows at its top condition. So you may have to do that. Then you're going to want to talk to a mover and see how much it's going to cost to move your items. If you have to put them in storage, that might be an additional fee. If you're trying to coordinate a move from one home to the next home, is that all going to coordinate together at the same time? If you have to have the mover hold the items, then it may cost you more money. And so some of these fees are fees that are not discussed when you go to the lender, and they don't put them on your good faith estimate. So we want to make sure that you consider all of these monies that you may have to spend on top of just your regular bank and closing costs. There's a couple of other things too in terms of the lender. Barry, what are some of the other things that you see that people might not be aware of?
Well, I think what's happening is people are becoming more educated, and they're shopping, and they're looking into things a lot more so now than they did in the past. And now with the internet and online, it makes it easier to shop. But you got to be careful. And I want to give you some advice on what to ask for when you're shopping online. Sometimes when you shop online, they'll say no points, no fees, and in essence, no points doesn't necessarily mean no origination fee. Now this happened to me. I actually, for fun, I did a loan application online, and I was told no points.
Right.
When I got my documents right before I was supposed to close it, there was an origination fee on there. Now technically, an origination fee is not a point. A discount point, the more points you pay, it discounts the rate, makes your rates lower. So that was a play on words that I was told over the phone. There were no points, and then there was an origination fee. Now, being in the business, I knew to look for it.
Right.
But I stopped the transaction, and I didn't go through with it because it was very misleading. Also, what a lot of lenders will do is they'll increase their fees rather than points or an origination fee. They'll say there's no points, there's no origination fee, but then you'll look, there's $2,000-$3,000 worth of fees. Okay, all they're doing is calling it a different name. So unless you're paying an underwriting fee, a processing fee, a tax service fee, that's pretty much it. That should be around $1,000. Some are $900, some are $1,100. Okay, that's normal.
Okay.
But when you start getting into administrative fees and all these different types of fees, and you start getting into the $2,000-$3,000 range,
something's wrong.
Something's up.
Yes.
Something's up.
So points are, and we've discussed before, 1% of what your base loan amount is, right? So for each point that you buy to get your interest rate lower, if you have a $500,000 loan, just for easy math, your point's $5,000.
It's about 0.25% in rate.
Yeah.
Give or take.
I see.
Not necessarily all the time, but it's every 1/8% is about 0.5 point.
Okay. So if you pay that up front, and that's a lot of cash for a lot of people, and you have to really make sure that paying that point is going to make a difference in your payment or not. So that's up to you and your loan officer. But you've got to make sure that you know that the loan origination fee is also considered a point but it's not called a point. So just make sure if you're shopping for a rate, if they say there's no points, ask if there's a loan origination fee on the loan, right?
Right.
Or any other fees, because you just want to go through that good faith estimate and make sure that everything, you understand everything, it's clear, and you have the final thing.
One last thing. When you get here these refinances that include all closing costs, again, they're raising the rate and they're giving it back. And closing costs are not prepaid, so be careful of what's included and what's not included.
Okay, thank you for joining us today.